monitor and maintain your investment regularly. Do not let the agent, do not let the investment salesman to monitor for you. Guess what? He won't, because he's busy looking for the next client. So do not forget about the investment that you have invested. Take return enhancement action. Okay? One action that you can take is to rebalance the portfolio. Okay? So when you invest, when you start, you're looking for 50% bond, 50% equity. But as a market run, equity become too high. So when you rebalance, you balance it back so that your risk exposure is the same. At the same time, you also practice the strategy of selling high to buy low. This is interesting. As you invest and your certain investment make money, certain investment lose money. So when you need money, would you sell those investments that make money, or will you sell investment that lose money? So I can see, what do you sell? So when you need money, do you sell investment that make money or investment that lose money? And I can tell you, based on my survey, most people will sell investment that make money. Okay, be careful about this strategy, because when you keep on selling those investments that make money, you will eventually end up having investments that are all losing money, that are all underperforming. So that is a wrong strategy to adopt. Okay? So that's why I would suggest you, even before you need money, remove underperforming investment. Acquire better alternatives. And when market is low, top up. Some investor, they like to tell me, say, Yap, I believe the crisis is very near. Anytime market will go down 60%. So I will take all my cash and buy low. But actually, if you monitor your investment closely, and monitor the market closely, you will find, as of now, there are certain market, for example, China market has already done a major correction. So you do not need to wait until the whole world to collapse for you to start investing your money. When China market started to have correction, as market is low and attractive enough for you to consider investing into China market, for example. Okay, so one question I would like to ask you, which I find very interesting, and is something that I think all investors should know. Do you think, can your investment that you invest into one particular fund, can your own investment get a higher return than the fund's return? Which means when you invest into the investment, say for example, you invest in investment, this investment get 10% after 3 years. So is it possible for you to get more than 10% when you invest into this particular fund? So let me share with you what is my observation and what's my research. Okay, let me show you a case, the actual fund. This is the actual fund. Of course, this is a principal Greater China Fund that happened in a certain period of time. I'm just using this as a case study. Okay, after investing for 3 odd years, the fund from 0% go back to 0%. So this is the return of the particular fund. So if you invest into this and just follow it, then chances are you are getting 0%. But I can share with you, if you were to apply profit-taking strategy, this strategy will help you to enhance the return higher than the fund. As you can see, when market go up, you take profit, and market go down, you reinvest the profit taken back. And when you go again, you take profit and reinvest again. So after 3 odd years, compared to the original fund return is getting 0%, you are able to get 25% return more than this particular fund. So the answer is that you can, if you apply the right investment strategy. Okay, this is what I call take profit and reinvest the profit. So that's why I call these are some of the wise strategies that Wigman have developed and have shared with our client to enhance their return without taking too much risk.
If money is important to you, please remember to subscribe to my channel.